Mortgage Dr. Rich here with part two of a two-part production on LTV, CLTV, and TLTV. Now, in a previous video, I went over loan to value or LTV, and hopefully you watched it and it makes sense. In this video, however, I am going to discuss CLTV, which is combined loan to value, and TLTV, which is total loan to value, both of which are equally as important as LTV. So CLTV, or combined loan to value, represents all outstanding property related debt in relation to the value of the property. TLTV, which stands for total loan to value, which, by the way, is synonymous with HLTV, high loan to value, and HCLTV, high credit loan to value, three names for the same thing. HLTV, HCLTV, or if you want to call it TLTV, represents all outstanding property-related encumbrances in relation to the value of the property. So let me illustrate this a little more effectively, if I may please, through an example. So let's say that there is an individual who owns a home. It's worth $400,000, okay? And on this property, this individual has a $100,000 first mortgage loan in the first lien position. In the second lien position, she has a $200,000 home equity line of credit. Now, the home equity line of credit, although it's technically for $200,000, only has a currently outstanding balance of $100,000. Now, mind you, each individual lien has its own LTV. Let me say that again, because this is also very important. Each individual lien has its own LTV. But when all you're referring to is straight up LTV, that always refers to the LTV of the first mortgage. So if I, for example, wanted to know what the LTV was of the home equity line of credit, I would have asked just that. What is the home equity line of credit's LTV? But if all we're being asked for is straight up just LTV, that always refers to the LTV of the first mortgage. And in this situation, our LTV is 25%. And that's because we have a $100,000 first mortgage in relation to the $400,000 property value. Our combined loan to value, why, that's 50%. And that's because now we're looking for all outstanding property related debt in relation to the value of the property. So in this example, the borrower owes $100,000 on the first mortgage, and she currently only owes $100,000 on the second mortgage. Together, that's $200,000 in relation to a $400,000 property value. That gives us a 50% CLTV. Now, mind you, CLTV is only a momentary snapshot in time. And that's because the moment that the borrower pays anything down against the outstanding home equity line of credit balance or borrows against the available credit of it, either way, up or down, even by a penny, that CLTV will fluctuate. Our TLTV, why, that's 75%. And that's because we're now looking for all outstanding property-related encumbrances in relation to the value of the property. So here we have a $100,000 first lien encumbrance, a $200,000 second lien encumbrance, for a total of $300,000 in outstanding encumbrances in relation to a $400,000 property value. And that's why our TLTV is 75%. Now, I'm perfectly aware that the borrower only owes $100,000 on this home equity line of credit at this time, but there's nothing stopping her from borrowing any second now another $100,000 and owing the full $200,000. So because the total available credit limit is $200,000, that is the amount of the lien that we have to place against the property's title, and the lien is the encumbrance. That's why we have a $100,000 first lien encumbrance, a $200,000 second lien encumbrance, together, which is $300,000 in outstanding lien encumbrances in relation to a $400,000 property value. And that is why our TLTV is 75%. So there you have it, folks. Hopefully you understand LTV, CLTV, and TLTV three extremely important concepts when it comes to mortgage origination. Please follow, like, share, do whatever you need to do, subscribe to learn all sorts of mortgage test tips and strategies, as well as things to help you hit your career into the next dimension. Mortgage trainer or mortgage Dr. Rich saying goodbye for now.